Yes, my people, welcome back to Big Times. So, my people, this is a place where the real challenges meet real solutions. And my people, today we are diving into a very deeply stressful but very important topic. The topic is the mortgage defaults leading to foreclosure. So, you know that this is a reality that many Kenyan families are facing today. So, my people, I'll walk you through a very relatable story of one of the family's struggles and success. Then break down the clear, detailed steps you can take to protect your home from such challenges. So, my people, along the way, we will unpack your constitutional rights and explain the economic conditions impacting every homeowners right now. So stay with me because we got a lot to cover. So my people, I'll start with the story of one of my family, one of my neighbors, that is David. Just a factory worker living in Nairobi with his wife and 2 children. So it was in 2019 David achieved a milestone many dream of. He secured a 15-year mortgage on a modest 3-bedroom home, just a safe haven for his family.
Wow!
So, for 2 solid years, David kept up with the payment. Every month, the money was there. The family felt secure. But then, COVID-19 struck. David's factory hours was slashed by half. His income dropped drastically. So, his saving dried up and his expense piled up. So, the first missed mortgage payment came quietly. David thought it was just a small bump, but soon the bank sent a notice of default. The final demand letters, the threat of foreclosure loomed. So, panic set in, but instead of calling the bank or seeking help, David delayed almost every day. He ignored the letters, and the problem grew bigger. So, auction sign went up near his home, and fear overwhelmed him. On the brink of losing everything, David finally reached out for legal advice. He reached out for financial help and a plan, and it really changed everything. My people, his story could be yours too. So my people, before we get the solution, it's important to understand the bigger picture. Kenya's economy and lending environment have been under pressure, and that impacts. This has really impacted the homeowners like David. So, first, the non-performing loans, those are the loans that borrowers fail to pay, have surged to 17% as June 2025. That's the highest in 20 years, meaning that nearly 1 in 6 borrowers are struggling to repay the loans, according to Eastleys and allafrican.com. So, why is this happening? Several reasons, although the Central Bank of Kenya lowered the policy rates from 13% to 9.7% this year, commercial banks still charge higher interest, that is between 16 and 17%, making monthly payment tougher for many. So, inflation, which affects everything from food to fuel, has stabilized between 3.8% and 4.1% recently, but it still squeezes household budgets. Economic growth slowed to 4.7%, and that was in 2024, with a forecasted modest rebound to around 5 to 5.3% in 2025. The private sector, which employs millions, has contracted. and the purchasing managers index, that is PMI, dipped below 50 in mid-2025, a sign that many businesses are struggling. So these economic factors combine to make loan repayment harder, increasing default risk for families across Kenya. That's why understanding the law and taking action is more critical than ever. So my people, fortunately the Kenyan laws protect homeowners facing mortgage difficulties. The 2010 Constitution, Chapter 4, that is Bill of Rights, guarantees the right to own property, that is Sub-Article 40. Article 40, Sub-Article 1, and says that you cannot be deprived your property except by due process of law, that is Article 40, Sub-Article 2. And the Land Act of 2012 requires that lenders to issue a statutory notice within 1 month of your missed payment, that is Section 90, and a sale notice at least 40 days before auctioning your property, that is Section 96. Additionally, borrowers can challenge foreclosure procedures or redeem their property before sale under the Kenya Civil Procedure laws. My people, these laws mean banks must follow strict processes before they can take your home, giving you legal time and options to act. So my people, this is how you can handle these challenges. Step 1, I need you to take these very serious. So our first step is act immediately. You have no time, don't wait. So David finally called his lenders as soon as he got the default notice. Early communication helps the bank understand your situation and open the door for help. So don't hide or delay. So step 2, request loan modification or repayment plan. So David negotiated a payment holiday for 6 months and extended his loan term to lower monthly payments. Many lenders have flexible option. You can also ask for one. So our third step is review fee and mortgage statement. So when David reviewed his statement, he saw heavy penalties. So he requested partial waivers, explaining his good faith to pay what he could. So our next step is generate additional income. My people, to meet payments, David rented out a room in his home and took on part-time work, showing effort to repay the loan, and that really built trust with his lender. So our fifth step is explore refinancing or selling early. So my people, if your current terms are unaffordable, refinancing with SACCO or another lender may help. And alternatively, selling your home before auction protects your credit and also helps you keep some equity. So our sixth step is seek legal counsel. David hired a lawyer who found the bank had not followed or had not set proper statute of notices. That mistake delays his foreclosure, giving David more time. So you need to always consult the lawyer to check if the lender follow the law. So our seventh step is you need to observe strict budgeting and record keeping. So David and his family trimmed all non-essential spending and tracked every payment and communication. Good records protect you if it keeps the reference and protect you if the disputes arises. So our last step is build your safety nets. Once stable, David set aside 6 months worth of mortgage payments as savings. He set aside 6 months, that is worth of mortgage payment as savings, and then diversify his income to reduce the future risk, So, my people, you need to keep this in mind, and you need to be aware of these, because these are challenges that may arise at any time in your life, So, my people, these are timelines, time on how you can act or how you can handle these challenges, So, from week 1 to week 4, if you miss a payment, you need to call your lender immediately. Week 5 to week 8, bank issues statutory notices, so you need to negotiate a repayment plan, So week 9 to week 12, you need to restructure, you need to refinance and consider selling your property, From that is 3 months to 6 months, you need to use legal counsel to check bank procedures and delay foreclosure if notices weren't properly served, So with 6 and above, you need to stabilize your finance and build your emergency fund, So my people, David almost lost his home, but because he acted early and knew his rights, this really saved him, So imagine what early action could do for you or someone you know. So remember to know your rights. You need to understand your rights under the Constitution. You need to understand today's economic conditions and realities, and most importantly, you need to act promptly. So don't wait until it is too late, So my people, this is all for today. If this video helped you, please share it with a friend or a family who may need it. And don't forget to hit that subscribe button to BIGTIMES podcast, so that you are always updated on the strategies that can help you win in life's challenges. So my people, I like to appreciate you. So until next time, stay informed, stay empowered, and keep your home safe. Thank you, man.